Welcome back. It's been an important quarter for IT. After a long time, many quarters, there has been some optimism in IT stocks because the results and the guidance has not been as bad as the market was fearing. In fact, most large cap and mid cap companies have come out and spoken fairly confidently about 2009, contrary to what popular expectations had been till this month. So, as a result, the IT sector has rallied and has been an important constituent of this nifty rally above that 5,000 mark, where we are today. To talk more about Satyam's guidance for fiscal year 2009 and how they see the turf for the next 4 quarters, Ramalinga Raju, founder and chairman, Ram Mainampati, president, and Srinivas Vadlamani, chief financial officer of the company, join in from Hyderabad. Gentlemen, morning. Thanks for joining in. Raju, if I could start with you, tell us a little bit about how you're reading the backdrop, the US backdrop for 2009, and what has gone into that 24 to 26% revenue guidance that you've held out for the market.
The last 2-3 months, we have all stayed tuned to the developments that are happening in the US markets and other markets. Our reading of the situation is such that it is well reflected in the guidance that we have given, which is 24 to 26% growth in the consolidated growth numbers, and 17 to 19% EPS growth is what we have guided. So what we are sharing with the investors today takes into consideration our interactions with our customers and our reading of the market situation. So we are fairly comfortable about the guidance that we have given, and we are particularly very happy about how we have performed during the last financial year. It has been quite a phenomenal growth given a number of challenges that we were faced with, given the fact that the dollar has weakened quite significantly. We have been able to deliver well on our guidance, and last year we kept increasing our guidance each quarter based on the additional inputs that we have been getting. So we step into the current financial year with a certain amount of optimism, while taking into consideration the challenges that we are facing in the marketplace.
Our initial check with analysts throws up that they're happy with your revenue guidance of 24 to 26%, but they would have liked to see your profit guidance at 22%, 21%, which has come in at 17 to 19% for 2009. Are you expecting any margin pressures because of which your EPS guidance in percentage terms seems a bit more muted than your confident revenue guidance, Raju?
There is no breadth of challenges that we face, with the fact that there is an expected slowdown in the US markets. We have to also take into consideration the fact that the prices, we cannot account for prices being significantly higher. We have given a guidance taking into consideration a stable price environment, and under the circumstances we believe that is a good position to be in. We have to also factor in the fact that each year you have to enhance your wages and in a way find appropriate balance by way of operational efficiencies. So taking all this into consideration, I believe that the guidance that we have given under the circumstances is a healthy one and a positive one.
Ram, morning. For a couple of other tech companies that we've spoken with, the sense that we got was that the second half of the year would be a bit stronger. Is that something you echo, both in terms of pricing and volume growth? Because this time analysts seem a bit disappointed with a slightly more subdued volume growth as well.
Well, sitting here where we are in the current state of the market, it is very difficult to predict what would happen in the second half compared to the first half. What we have taken a position on is looking at where the market is today and what is the most comfortable guidance that we can give based on the momentum that we have in Q4 and the outlook that we have in Q1, based on the markets that we are very active in and the markets that are impacted by the current conditions. But I believe that it would probably require a few weeks to months for us to get complete clarity on where the markets would be for the rest of the year. We will certainly take a position at that time, but at this stage it would be very difficult for us to say the second half of the year would be more positive than the first half. All we can say at this stage is to wait and watch and see how things would unfold in front of us.
Srini, there's been a forex loss as well. What are you working with for the operating metrics by way of what you see for the dollar rupee, what you're holding in terms of price growth from here on?
Mitali, we have taken a rupee dollar exchange rate of 40 rupees per dollar. I think that is what has gone into our guidance. So far, I think last 3 months or so, dollar is behaving well and it is kind to us, and we have in fact seen a depreciation. While when we are taking a call for the next 12 months, the indications are that rupee may remain at 40 rupees or it may appreciate a little bit. So we have, from that point of view, we have factored in a 40 rupee dollar guidance and accordingly arrived at this 26% in top line and 19% upper end of the guidance for the EPS.
Srini, same question to you that I was asking Raju. The 17 to 19% guidance, what is your operating margin assumption for this year which has gone into this guidance? Are you expecting any significant margin pressures or erosion this year?
We have factored in a 50 basis points decline at our operating margin level of the year. This is on the back of the whatever Raju alluded to, the wage increments that we need to give effective 1st July. We have factored that in. We are considering a wage hike of around 12 to 14% in offshore and 3 to 4% for our on-site employees. That translates to around anywhere between 3 to 3.5% on our revenues. So while that is the headwind we have factored in various other operational efficiencies and accordingly said that we will be able to limit the decline to only 50 basis points. So that we have factored in our guidance. Accordingly, you see that gap between revenue growth and the EPS growth. In addition to this, we also have factored in a 2% equity dilution because of the RSUs that we have given. So if we factor in these two, that differentially will be explained.
Raju alluded to pricing and that fact that you're assuming no uptick in pricing this year. How challenging is the pricing environment right now, and are you seeing any attempts to renegotiate prices from large clients or any pressure on prices as such from the BFSI clients?
Well, then obviously pricing environment differs depending on the market segment that you're in. Clearly the BFS segment is more challenged than the others. But on an average, our outlook is that the prices would remain stable at the Q4 levels getting into FY09. Any positive benefit that we see from pricing would be an added bonus. But our assumption is that given the different sectors get impacted differently based on the market conditions, we are hoping that our prices would remain stable at Q4 levels.
Okay, gentlemen, stay on. We'll take a quick break and come back. There's lots more to ask the Satyam management. What's the stock doing? 2% up at 478. We're discussing their FY09 guidance, visibility, and of course look back into the year which has gone by. We'll be back with the Satyam management and the markets in a minute.